Bryn, Palantir on pace to break a 4-week losing streak.
Yeah, I mean, Palantir was an AI company before AI was cool. This is without a doubt. I think there's no other software company that has the scale of the military contracts. And I think it's a misunderstood company because that's what most people think it still does. They continue to get big awards from U.S. and U.S. friendly countries. But really what I'm excited and why I bought the stock is what they're doing on the commercial side. They've been doing these within their AI platform, these AI boot camps. Last quarter, that was up 70% year over year. Their commercial revenue, just plain and simple, was up 30%. The stock made 3 cents, the earnings 3 cents last quarter. I think this is early days for them. They're hiring a sales team to really go after the commercial traffic. I think that they're so trusted. Their earnings come out at about 9 or 10 days. I think this is one to watch that has a lot more upside.
Shares are up 3% here today.
Palantir Technologies is a company that has been gaining significant traction thanks to its extremely impressive AI offerings, so it's only natural that Palantir stock managed to successfully capitalize on the AI boom, soaring by a staggering 190% over the past year. As for this year, the stock is up approximately 36% year-to-date, leaving many investors wondering about where the stock is headed next after a recent sell-off from its 2024 peak. Well, ARK Invest's CEO, Cathie Wood, has an idea of where Palantir stock is going, as she recently increased her Palantir holdings massively, and that's what we're going to talk about in this video. We'll also talk about some unusual options activity that points to a hefty upside for the stock within the next month. But before we do that, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
So we are looking for that. In AI, and I have to say, Palantir reported this week, and Alex Karp, who's the CEO, believes that Palantir will be the largest AI company in the world. And after looking at their results, listening to Alex and his team, I think that might be right. Because what's happening is companies around the world are saying, this is big, and we know we can't be left behind. And CEOs are getting involved in the decision, not just CTOs. Because there's so many small AI companies that have these, chatbots and point solutions, and they're depending on others to put them all together. Palantir is saying, no, you have to look at the organization and get the data in one place, integrate it, get the workflows. So I think it could be a big disruptor, and nobody believes this right now, but it could be a big disruptor to Microsoft.
Cathie Wood's ARK Invest just picked Palantir in a new major buy, acquiring 100,344 shares valued at $2.26 billion. This was in addition to the 45,229 shares worth $981,923 that Wood's fund acquired just a day before. So why is Cathie Wood so bullish on Palantir? Maybe Wood sees the company's upcoming earnings on May 6th as a positive catalyst for Palantir stock and expects it to go up after the company reports earnings. This makes sense when you look at analysts' expectations for the company. In fact, analysts expect Palantir to make $625.33 million in revenue, which would result in an EPS of 8 cents per share, and this is a significant upside from 2023's Q4 results, which were $525.19 million in revenue and an EPS of 5 cents. Still, this would represent Palantir's slowest revenue growth rate yet as a public company, indicating some potential deceleration, especially in the company's government business. However, according to analysts, Palantir's commercial business revenue is expected to grow at a much faster rate of 34% year over year. While Cathie Wood is ultra bullish on Palantir, not all analysts are convinced that this controversial data analytics company is a must-buy. For instance, Brian White at Monness Crespi Hart just upgraded Palantir from sell to neutral, but he didn't add a price target, suggesting he sees limited upside from here after the stock's meteoric rise over the past year. White's not alone in waving the caution flag. Of the 20 analysts surveyed by FactSet, 5 say the stock is a buy, 7 are at hold, and 8 have sell ratings. So why is White and all those other analysts not bullish on Palantir? White wrote in a research note that Palantir is well positioned to benefit from the long-term AI trend and capitalize on volatile geopolitics, but he believes that the company's valuation is excessive. For instance, Palantir stock trades around 61.8 times the earnings expected for the coming 12 months, while the S&P 500 trades around 20 times. So, while Cathie Wood sees Palantir as a key holding for the future, many analysts aren't ready to chase this high-flying stock. The cautious ones want to see if the company's commercial business could grow massively before turning outright bullish. Until then, they're probably staying neutral and waiting for a better entry point. Q1 results and forward guidance on May 5th will provide more insight into the health of Palantir's business, especially on the commercial side, and the market reaction to earnings will likely impact the stock price. Hello everyone, and welcome back to Investocracy.
But the opportunities associated with AI are transformational. This is going to be the biggest catalyst behind wealth generation during the next 5 to 10 years, and the super exponential growth opportunities that it will enable. Most people who waited until the S&P gave them permission to move into Tesla are underwater right now because there, as is always the case, with disruptive innovation, there's controversy. Impact of technology on real GDP growth when there are big breakthroughs. And so, as Brett mentioned, the breakthroughs in the early 1900s, telephone, electricity, internal combustion engine, created a step function increase in growth. And you can see it here.
The reason why Palantir stock dipped over the past few weeks actually has nothing to do with the stock or the company themselves. Instead, it looks like most of the losses come from general inattention and sentiment cooling after last quarter's great earnings report sent shares soaring. So, this isn't really a big dip for investors to buy, but still, this stock is down enough that shares are worth buying before the next leg upward. And that leg may be coming sooner than we think, as some recent unusual options activity points to hefty expectations for the stock within the next month. Now, it's not like option flows should always be considered great catalysts for stocks, since some trades are done to hedge or execute for other reasons, but this Palantir trade is worth paying attention to. Bar chart recently showed an unusual options activity report that showed that almost 7,000 call option contracts expiring May 17th have traded. The strike price is $26.50, which is an upside of 17.6% from the stock's price as of the time of this video. This means whoever bought these calls is very optimistic about the near-term outlook for Palantir stock. Not only that, but the premium at the mid-price is only 41 cents, or just 0.15% of the call strike price, meaning that short sellers are not making much money on this trade. So, the initiating trade possibly came from long buyers of the calls. But is buying these call options a good idea? These call options could be attractive to near-term buyers as the company is set to report its Q1 earnings on May 6, and that is well before the expiration period of these out-of-the-money call options. The investors in these calls do not necessarily have to hope that the stock will rise to $26.50 by May 17th. Rather, if the earnings turn out to be great, the extrinsic value of the options could likely push their price well over 41 cents. Keep in mind that the downside risk is extremely high. For example, the intrinsic out-of-the-money option like this is zero. That is because unless the stock rises to $26.50 or higher on or before the close on May 17th, the calls have no intrinsic value. So, investors in these calls are essentially gambling and highly dependent on the sentiment related to the outlook for the company. And this brings us to our main point here. People buying this many call options for Palantir could be a sign that the earnings will be great. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Of course, artificial intelligence is the big story. And speaking of AI, you've been investing in it for years. Now that it has become a mainstream, let's say, can we still consider it a disruptive innovation?
Yes, actually, it has just begun in terms of its impact on enterprises and consumers. Right now, we feel we're in the equivalent of the early 90s when it came to the internet. We had just begun and we had miles to go. In fact, we're still learning how powerful the internet is. That is where we are with artificial intelligence today. And I also think what is not appreciated is how big a catalyst AI is going to be to all kinds of innovation around robotics, energy storage, blockchain technology, multi-omic sequencing. So it's a huge catalyst, and it's barely begun.
So we ultimately think at some point it's going to be going down to 8.
8. It's at 21 right now, guys, so go ahead.
It might take a little bit to get there, but what we see is not only from, again, a 23 times price to sales aspect, which we just view as
really
astronomical.
Lofty, yeah.
Yes. Obviously, it came into profitability around 2 years ago, and so that's helped what we believe is this wave kind of pushing it higher.
Palantir going to $8 per share will likely never happen thanks to a variety of reasons, and they're why many analysts and investors are bullish on Palantir stock. For starters, the main thing Palantir should do right now is focus on growing its commercial business to be able to offset the slowing growth in the government business, and the company's bootcamp approach is actually making this happen. These camps managed to attract new customers because they included presentations, software demos, and even racetrack rides for attendees. The company held over 500 boot camps last year and plans for 5 daily globally this year. But this isn't just wishful thinking, as demand for Palantir's products is extremely high. In fact, CEO Alex Karp compared the demand to a rock concert, limiting attendance like backstage access. Despite overflowing demand, analysts suggest Palantir may need to bolster growth support given the complexity of its software. This could result in increased capital expenditures, therefore margins could take a hit. Either way, Palantir stock has historically traded within a tight band before surging, then settling at or near a new floor. For a long time, that floor hovered in the $15 range, then strong earnings pushed the price to $25 before it settled into today's roughly $20 lower limit. If the company's May 6th earnings report echoes past trends, the recent dip might be the last chance to buy Palantir at these prices. So, what do you think? What are your expectations for Palantir? Let us know your thoughts in the comments section. If you would like to know more latest updates about Palantir and what they have been up to, then go ahead and click on the next video on your screen.